Well, a very good morning, ladies and gents. A very happy Friday. This is the Morning Blast on Friday, the 15th of August, with myself and Ryan, who I can already see is here. So I will promote him to the co-host seat now, and we will keep our fingers and toes and everything else crossed that we have a better Wi-Fi connection over to Croatia today. Ryan, are you there?
I am here, loud and clear.
Oh,
Come
perfect.
in, Danny boy. Come in, Danny boy.
And I see you're on the coffee this morning, not the mimosas. Has 4 days of drinking finally got taken its toll on you?
Oh no, definitely not. But yeah, we just thought a 9:30 start was a bit much, so we came to the conclusion that it's probably best for Ryan and Gemma to start on the coffee until the morning blast, and then walk straight over to our usual haunt where we should have a mimosa waiting for us.
Has the landlord not banned you yet?
Well, far from it, mate. In actual fact, we hit that crucial point in a client slash barman and bar lady landlady relationship where yesterday we didn't even have to order the drink. That was the watershed moment. That was when I was like, we have arrived, Gemma. We have arrived. So,
And he's only
and we had,
been there 3 days.
we had a couple of free shots of tequila as well. It's just a match made in heaven. Let's be honest.
Oh,
But
dearie
anyway,
me.
enough about my high function alcoholism.
Well,
Gemma
I'm
sends her love,
selling
by the
the high
way.
functioning bit.
Speaking about highly functioning alcoholics, Gemma sends her best.
Oh, good morning.
Right, crack on. What's been occurring whilst I've been getting drunk?
Well, given that you've forgotten your fucking legal
Oh,
disclaimer,
legals. Yes, yeah. As
just
usual,
don't
nothing.
trade
Nothing.
on what we say, least of all on a fucking Friday.
Yeah, exactly that. Nothing said by myself, Michael, or PIQ means anything but, just a bit of a laugh. But anyway, yeah, crack on.
Oh, dearie me. Right, where are we this morning? I best talk about PPI, to be completely honest with you,
Go for it.
given that that was really the only notable thing that happened yesterday. Hotter than expected across the board. Producer prices rising 0.9% on the month in July, by 3.3% on the year. This is US producer prices, of course. Way above the top of the forecast range. That came in at 2.8%. But while that does imply pretty intense inflation at the factory gate, and it's also important to remember, of course, that PPI excludes imports, so it doesn't actually show any direct tariff impact. The components of the PPI print that feed into the PCE number, which is, of course, the Fed's preferred inflation gauge, Ryan, you can have a shot of tequila now I've said that.
Whee!
The components that feed into that PCE release were actually relatively soft, and it translates, if you look at all the bank modelling, to a PCE number, core PCE number, of around 0.3% on the month and 2.9% on the year. So not enough to entirely derail, at least in the market's mind, the idea that the Fed deliver a cut in September, but enough to just plant a few seeds of doubt, I would say, is probably the best framing. If you look at market pricing this morning, we still see around a 9 in 10 chance of a 25 basis point rate cut at that September meeting. But that is down from just over 100% this time yesterday, and subsequently we saw a hawkish reaction across the board yesterday, with the dollar gaining ground for the majority of the session, the dollar index reclaiming the 98 figure, although we trade just south of that this morning. Sell-off across a steeper treasury curve led by the front end, with the two-year yield rising by around 6 basis points on the day, and some modest headwinds in the equity complex as well, although the dip buyers did emerge by the time we got to the close, with the S&P ending the day pretty much flat and the Nasdaq 100 ending the day down just 0.1%. On the subject of equities, actually, it'd be remiss of me not to mention this morning that the FTSE 100 is trading north of 9,200 for the first time ever, notching fresh record highs. If Mr. Houston is listening, we're 800 points off his 10,000 target now, which
Um,
you would imagine
uh,
we get to at some stage. Go
and
on.
just a reminder that about 80% of the FTSE 100 components revenue is generated outside of the UK. So don't think for a second this is indicative of a thriving UK PLC.
I don't know what you're on about, mate. It's all down to the humongous degree of economic acumen that our esteemed former BOE economist of a chancellor continues to display.
Yes, sorry, I completely forgot about that. Yes, you're quite right.
It's all down to Rachel. Cheers,
Yeah,
Rach.
yeah. Yeah, thanks, Rach.
Right, moving on from that, a few other bits and bobs of data just worth me mentioning before we get on to some other headlines. We did, of course, have the weekly jobless claims stats out of the States yesterday. Initial claims at 224,000 in the week to the 9th of August, as near as makes no difference, unchanged from the 226,000 we saw previously. Continuing claims falling to 1.953 million, down from the prior 1.974 million. Of course, neither of those prints pertains to the August non-farm payrolls survey week. The initial claims print next week will coincide with that survey week. Other data points, the Norges Bank, they kept rates unchanged yesterday at 4.25%, repeating their guidance that they believe rates will be reduced further in the course of 2025. And then overnight, we had GDP out of Japan, where the economy grew by 0.3% on a quarter-on-quarter basis in the 3 months to June, considerably better than the 0.1% consensus. We also had some soft activity data out of China, which means that you need the usual caveat of, if the data was soft, how soft is it
Indeed.
really, when this is what they're manipulating and happy to tell us. Retail sales rose just 3.7% on the year in July. Quite a chunky slowdown from the 4.8% that we saw in June. Industrial production rose by 5.7% on an annual basis over the same period. That was down from a prior 6.8%. So things not going particularly
Just
well for the Chinese economy. Go on.
just whilst we're on the China economy and the poor economic data that we had this morning, and obviously if they're saying that, it's a lot worse. It would be, to coin your phrase, remiss if we didn't mention the troubling times for China's housing market. This morning we had some pretty dire data saying property investment in China declined 12% in the first 7 months of the year from the same period last year. That's after dropping 11.2% in the first half. That's according to official data. Property sales as well, by floor area, that fell 4% year on year compared to a 3.5% drop in the first 6 months of the year. And it carries on getting worse, basically. New construction starts measured by floor area slumped 19.4% after contracting 20% in January to June period. And also, finally, another piece of bad news for this sector. Funds raised by China's property developers in the first 7 months of the year were down 7.5%, sorry. So, yeah, there's just not a lot of good news coming out of China in the housing sector. And this comes on the back of a lot of stimulus. Well, they keep talking about stimulus for this sector. But as we know with China's stimulus, they are a big fan of all fart, no poo. They talk a good game when it comes to stimulus. Very little seems to actually filter through into the economy. And sometimes they don't even go as far as to print the money in the first place or even inject it in. But they do talk a good game.
The other thing, you're absolutely spot on there. The other thing with Chinese economic stimulus is over the last 12 to 18 months, it's basically all been targeted at let's try and prop up the stock market as opposed to let's try and
Yeah.
prop up the economy.
And what do we know about Chinese stocks?
Well, you don't really ever own them. That's the
There
first
we
thing to bear
go.
in mind about them. I certainly wouldn't touch it with a fucking barge pole.
I wouldn't touch it with
But
your
yeah,
cash, let alone mine.
well, yeah, exactly. Where was I? Tariffs, trade. We heard from White House advisor Peter Navarro yesterday. He said that pharma tariffs are a work in progress. Of course, Reuters sources reported during Wednesday's session that those pharma tariffs are probably not going to be announced for another couple of weeks. We also had Peter Navarro on CNBC saying, and I quote, tariffs are a tax cut,
Yes.
which reminded me of what Elon Musk had to say about Peter Navarro a few months ago, which is absolutely spot on in that he is, and I quote, dumber than a sack of bricks. How this bloke has ever been allowed anywhere near any levers of power is frankly beyond me.
Do you know what though? A levels in the UK out this week. If you didn't get very good grades, just look at Peter Navarro.
Yeah.
Absolute dumb as a box of frogs, and look where he is now.
Well, I mean, you look at like anyone in the Trump administration, to be completely honest
Look
with you. I
at
mean,
Trump, to be fair.
Kevin Hassett, who said the Dow's going to hit 36,000 by 2000, and it got there 20 odd years later. Yeah, good one. Anyway, moving on from that, we did hear from a couple of Fed speakers yesterday. 2027 voter Mary Daly. She was saying that she does not think a 50 basis point cut in September is warranted. To be honest, it doesn't really matter because she doesn't get a vote anyway. Someone who does get a vote is Alberto Newslam. He votes this year. He was saying that he would expect most of the impacts of tariffs on inflation to fade in between 6 and 9 months, but there is a risk that they could be more persistent. He was also saying that he now sees the break-even rate in terms of non-farm payrolls below 50,000. Now, this is really important because if you think back 12, 18 months, sort of latter days of the Biden administration, the break-even payrolls pace was 200, 225,000, primarily because of the impacts of immigration. Now, I'm not going to debate the merits of immigration here, but one thing is for sure, if net immigration is moving higher, the size of the labour force is increasing more rapidly, which means you need to add more jobs every month in order for growth in employment to keep up with that more rapid growth in the size of the labour force. At the start of the Trump administration, estimates have put the break-even payrolls pace at somewhere between 80 and 100,000. If Museum's now saying that's below 50,000, well, one, it implies that the labour market simply cannot grow at a much more rapid rate than it already is, no matter what you do in terms of interest rates. It also means that when you've got a 3-month payrolls average at 35,000, ordinarily you'd sit there and go, well, that's not great. But if that's the break-even rate, then maybe that's not actually too bad. And it's not cause for panic, as we've seen among market participants in the reaction to that July jobs report. In any case, Museum was saying that it's too early for him to be making a call on the September meeting. Of course, we've still got a month to run until that date. Sticking with policy, just in terms of dates of the diary, we've got a few speeches confirmed for Jackson Hole next week. I'm assuming our invites are still in the post, Ryan. Mine doesn't seem to have arrived yet. Fed Chair Powell, he will be speaking on Friday, the 22nd of August, next Friday, 10 o'clock in the morning Eastern time, 3 o'clock in the afternoon London time. Bank of England Governor Bailey, the big man himself, he will also be there. He speaks on Saturday at 5:30 in the evening London time, so going to have a bit of a split screen going on there. Bailey on one, Arsenal versus Leeds on the other. There were also
big game,
massive, even bigger when you realise my old man's a Leeds fan, so that could go
Jesus.
horribly wrong.
Oh no, what happened there?
Could ask that about many things, but we won't. There were also some sources stories doing the rounds yesterday that ECB President Lagarde is going to be at Jackson Hole as well. She has skipped the last few, but clearly thinks this one is more important than some extra time on the sunbed. So good for her. The full agenda for Jackson Hole, by the way, won't be released until next Thursday evening, but we might get some more reports in the meantime.
Just ask Macaulay Culkin. Everyone remembers their first Jackson Hole.
Oh, God. Moving very quickly on from that, a couple of other bits of corporate news this morning and last night, actually. The Trump administration, apparently they are looking to potentially take a stake in Intel. Of course, the CEO of Intel and Trump met at the Oval Office this week. Trump has been pushing for the CEO's removal basically because he's invested the entirety of his personal portfolio in a whole host of Chinese military companies. The US now, oh, absolutely not. Just half a yard in Chinese military stocks. I mean, what could possibly go wrong? Apparently, this stake, we don't know the size of that stake, but there are also discussions around bolstering Intel's planned expansion in Ohio. In any case, Intel traded about 8% higher on the back of that. Speaking of people taking stakes in firms, Berkshire Hathaway, of course, Warren Buffett, they disclosed their 13F filing last night. They've taken a 5 million share stake in United Health. Of course, UNH have just been the problem child of the Dow this year. Various investigations going on, various problems within the firm, not all of them their fault. I mean, the CEO got shot last year, of course, you can't forget that. But nonetheless, Buffett is buying the dip there. UNH jumping about 7% after hours yesterday. A couple of other things in auto news. Ford Motor Company, ticker F. They have filed a recall this morning for one vehicle. What the hell is the point of them doing that? And last but by no means least, a company called Lambda. They are said to be in talks with banks for an IPO as soon as the end of this year, which could value the firm at between $4 and $5 billion. I've got no idea whether Tom Talks Cars is here this morning or not, but I did some research into Lambda yesterday. They are apparently building, and I quote, gigawatt scale AI factories for training and inference. What the fuck does all that mean in English?
Yeah, no, absolutely. Big fan of that. Cool.
Good for them, I guess.
Thank you for that, Mr. Michael Brown. Just going to read out some choice headlines from our dear friend Zach's Overnight News Roundup. Zach's listening in, so I'm sure you can all see him. Do follow him if you don't already. Obviously, no Substack this week
Good morning, Zach.
because I can't really be bothered to load up my Substack on my laptop because I'm a lazy bastard. Starting off in trade news, this one kind of made me giggle a little bit this morning. China is warning Western companies against stockpiling rare earths or risk even greater shortages as Beijing's tightly controls supplies of the metal vital to electronic vehicles and other civilian and defence sectors. Now, yeah, maybe it's just me, but when a country tells you to stop stockpiling because you'll risk further shortages, that makes me think that I should stockpile the shit out of whatever they're talking about. So interesting to see how that one plays out. But anyway, who am I to judge? Japan's economy minister Akazawa stated that his understanding is the latest US-Japan trade agreement includes the chip-making equipment sector under the broader category of chips. However, he clarified that this specific point has not yet been directly discussed with the United States. I've taken a bit of a gamble there. Akazawa also noted that the new US tariffs is likely to reduce Japan's real GDP by approximately 0.3 to 0.4%. Macro news, headline from Japan. Japan's economy grew faster than expected in the second quarter as export volumes held up well against US tariffs, giving the central bank some conditions it needs to resume interest rate hikes. China, as we spoke before, China's economy, just massive amounts of poor data today. Loads of it being posted on PIQ, so do check that out. China's steel and coal output, that fell in July as bad weather affected operations and the government's efforts to rein in overcapacity intensified. American Bitcoin, a US cryptocurrency miner backed by Donald Trump Jr. and Eric Trump, is on the hunt for companies in Asia to load up with Bitcoin. That's according to FT sources.
For God's sake.
I'm guessing our dear friend Cam will maybe raise this later on in the crypto blast. I'll be about 6 cocktails in at that point, so worth checking that out.
Buying 6.
Yeah, mine. London is bearing the brunt. I nearly said brewing. God, I've got it on the brain now. London is bearing the brunt of the UK's job slowdown.
It's only 8 a.m.
I know. As a combination of tax rises, elevated wage costs and weaker consumer spending forced the city's businesses to cut payrolls faster than in the rest of the country.
Actually, just on that.
Yeah, go on.
I was thinking about this yesterday.
Okay.
So obviously it's mid-August. It's the middle of the school holidays here in the UK at the moment. I don't remember, outside of COVID, obviously, I don't remember an August where the city was this quiet. And I don't just mean in terms of workers,
Pubs.
but also in terms, pubs, yeah, you don't have to queue for a pint, which is nice. But also just tourists, people going to see the Monument or the Bank of England or anything like that. Just feels very, very quiet this week. I don't know whether it's because of the hot weather putting people off or what it is, but just feels like there's something going on, anecdotally, of course.
Do you know what? Anecdotally, before I came away, I was sat in the American bar and I was chatting
Surely not.
Well, yeah, no, it will come as a shock to many. But chatting to Scottish John, who's head of the alcohol and beverages at the hotel. Obviously, there's no better place to sit better place to talk to than him. Obviously, I made friends with him on day one, and he was saying that not just the Stafford, but many hotels in London, it's been a bit of a shitty first half of the summer when we were talking. So yeah. So that kind of ties in nicely with what you said. Strange one. Where was I? Okay, a couple of headlines from New Zealand. We love an antipode. Over 90% of economists surveyed, or 28 out of 30, in August 11th to 14th Reuters poll, expected the RBNZ to cut its official cash rate by 25 basis points to 3% on August 20th. 2 expected no change. Sticking with New Zealand citizens leaving the country have hit the highest level in 13 years, with more than a third of those emigrating aged 30 or under as unemployment rises and economic growth remains soft. Now, for fans of demographics, this is very, very bad news for New Zealand. If all their young talent is leaving, what's going to be left apart from sheep farmers?
I was just about to say, unless you want to be a shepherd, there's no fucking point being there.
Yeah, I'm glad you said shepherd. New Zealand, sticking with New Zealand may be just weeks away from deciding whether to loosen a ban on foreigners buying houses. This is obviously a measure to try and inject some more money into the housing market and prop up the economy. Why have I raised this, you ask? Again, no trading advice, but I'm increasingly bearish. New Zealand and the currency over there. Sticking with currency, Hong Kong dollar
The Kiwi
bouncing.
dollar's about to go to 80.
Yeah, exactly. No, my luck. Couldn't pick me nose, let alone fucking a trade. The Hong Kong dollar bounced and pulled away from a weak end of its fixed trading band against the dollar after months of pressure. An early sign that sustained intervention by the city's de facto central bank may be taking effect. Singapore, their new home sales rose to the highest level since February, despite introduction of new curbs, an indication of renewed buying demand in the city-state. And finally, for me, just a couple of equity headlines. 13F data compiled by Bloomberg show the value of hedge funds' combined investment in China's Alibaba Group dropped $1.55 billion, the biggest decrease by market value of any holding. Meanwhile, hedge funds holding of Microsoft grew by 12 billion to 47 billion in 3 months ending June the 30th. What else? Morgan Stanley have played down concerns that Nvidia's next-gen Rubin chip will be delayed, where it says the chip will be entering mass production in Q2 26. And finally, from me, what else we got here? TSMC plans to build its first COPOS, chips on panel substrate, advanced semiconductor packaging test line next year, but volume production will wait until 2028-29. That's in South Taiwan. So apparently this could be a bit of a game changer for them. Tell you what, finally for me, Rivian says the rollback of fuel economy rules in the US is holding up $100 billion of revenue, a sign of how changes to automotive policies under Trump administration are starting to hurt the electronic vehicle industry. That's according to the Wall Street Journal. And that's it from me. Back to you in the studio.
Very good. Thank you, Ryan.
Thank
In
you.
terms of today, then, a few data releases stateside on the docket at 1:30. The European docket is completely empty, by the way, before we just skip on to that. At 1:30 this afternoon, we get the July retail sales report. Headline sales are seen rising by 0.6% on a month-on-month basis, unchanged from the pace that we saw in June. The control group sales metric, meanwhile, which broadly reflects the basket of goods that feeds into the GDP release, that is seen rising by 0.4% on the month. Again, pretty much unchanged from the 0.5% pace that we saw in June. Of course, the retail sales report will attract a little bit more attention than usual, given the fragility that we started to see coming through in the July jobs report. Participants will be seeking to see whether that has filtered through into consumers tightening their belts. But leading indicators such as all the bank credit card spending data, they all point to sales having remained relatively resilient. Other bits and bobs out of the States today at 2:15 London time, we have the latest industrial production stats. Industrial production is seen having stagnated in July after a 0.3% rise in June. And then at 3 o'clock, we have the preliminary consumer sentiment numbers from the University of Michigan. That index is expected at 62, up from a prior 61.7. In terms of other things to focus on today, just one Fed speaker, and that is Chicago Fed President Austin Goolsbee. He is, of course, a 2025 voter. He'll be on CNBC at 1:30 this afternoon. And of course, the other main focus for financial markets today will be this meeting between President Trump and President Putin in Alaska. Now, this meeting is not due to begin until 11:30 local time. That is 8:30 this evening here in London, 3:30 this afternoon in New York. We are not entirely sure how long these meetings will take place. There is going to be a one-on-one meeting between President Trump and President Putin, obviously just those two and their translators, before a wider group of officials meet. There will be a press conference after these meetings conclude. There are conflicting reports. Russian media were saying that would be a joint press conference. Trump yesterday was saying it might be a joint press conference. It depends how things go. As always, liking to inject a bit of jeopardy into things. But importantly, Trump has already started laying the groundwork for this basically being a meeting about another meeting, whereby this is sort of Trump and Putin having a bit of a chat and a natter and a catch up, and then they'll organise another meeting where they may invite Zelensky, where they may invite other European leaders, and that would be the sort of proper peace summit. So I think expectations for a huge concrete agreement or breakthrough have been massaged lower quite significantly. The big issue, though, for financial markets is in that timing. Of course, the cash equity close, everyone should know this, is 4 o'clock in the evening or in the afternoon New York time. Futures will close an hour later than that. the likelihood is that the press conference and all of the concrete reporting out the back of this meeting will come long after the market has closed, probably into the very early hours here in the UK. As a result of that, there is therefore the potential for quite significant gapping risk
Well,
across the board. Obviously, you'd say in accrued benchmarks, but in FX as well, when things get underway again on Sunday. Go
I
on.
was just about to say the markets are reminiscent of a German brothel this weekend. Lots of gapping risk.
Yes. Thanks for that analogy. The other thing that, of course,
Oh, sorry, I've just been told off by Gemma.
yeah, good. The other thing to be aware of course, not only is that potential for gapping risk, but also people looking to square up their positions as we move into the weekend. Are you really going? The classic one is, and Ryan, of course, used to trade crude. Not that he mentions it very
Not that I
much,
mention it.
but do you want to be short crude into the weekend when there's a big chunk of geopolitical risk? Arguably not. So do
And
just watch for
the same
that.
goes for agricultural markets. All of this, there's a lot of markets tied up waiting for a resolution on all this.
Yes, absolutely. So do bear in mind, we might see some squaring up of positions and also the potential for some gapping risk when things get back underway
Do you know
on
what? In actual
Sunday.
fact, I would say probably the agricultural markets, or corn and grains and stuff, probably the most at risk to some significant moves if all of a sudden everything turns out, Monday morning we wake up and there's no more war. Because obviously that'll be a huge, because there'll still be some time for sanctions and stuff it will take a while for sanctions that to be removed. But when you talk about grain markets, obviously it means, a lot of cargoes can then freely exit the Black Sea region without the risk of being blown up. So I
Yes.
know there's a lot of agricultural participants, especially at the moment with harvest going on in the US, going kind of ratcheting up over there. There's a lot of people watching to see how the Black Sea movements are kind of developing. So one to keenly watch on that front.
Yes, I will defer to Andrew Setzer in the Grain Blast on
Oh,
that one because
absolutely.
I absolutely know I'm going to stay in my lane
I
there.
literally, the only
But
reason I'm saying this is because I've been listening to her on my show.
but I think just as a sort of broader final point, if you are running any positions, of course, this is not trading advice,
Good
but if
luck.
you are going to run those positions over the weekend, be very prepared for the market to be in a very different place when you
Yeah.
get back to your desk on Monday morning or when you're checking your
I
phone
mean,
on Sunday night. But that
it's
is
kind of,
pretty much it from me.
I've, thank you very much for that, Mr. Michael. But just, finally on that point, I think that's been kind of the story for, both terms of Trump, right? There's always enhanced, weekend movement risk, gapping risk. And unless you had to have positions over the weekend, I really don't see the point in having positions over weekends at the moment. Unless you have to, obviously some people are forced to, or some people much longer term investment, kind of outlooks and whatnot. But as a shorter term trader, just be flat over the weekend. Give yourself a fucking break. But anyway, that's just
Yeah,
me.
no, I agree with that. I mean, if you're running like a global macro book or something, then
Oh yeah,
obviously completely ignore that. But
yeah.
the only downside of that is you're going to pay a bit of spread and a bit of commission to
Oh
exit
yeah,
on Friday and come back in on a Monday. But that
but
massively is outweighed by the peace of mind that you'll get from
and
just
also,
being
like,
able to actually
most of the
sleep.
people that we're talking, when I'm talking to people like this, I'm talking to people that the books are deep enough now that they're not going to move it a tick, and they're a tick
Hmm.
wide. So you're going to pay the bid offer spread, which is a tick. So I don't think for most people, unless you're unless you're adding a yard on and taking a yard off, I don't think really going to matter.
And if you are, why are you listening to us?
I didn't want to say it, but anyway. On that note, Michael, thank you so much for a lovely, great week. I wish you a much better weekend than your father, obviously. Listeners, thank you so much for tuning in as always. Myself and Michael really do appreciate it. Whatever you're doing today, have a great one. Whatever you're doing this weekend, have a fantastic one. Stay safe. We'll see you all on Monday. Much love.
We will indeed. Bye for now.